Welcome into Market Day Report. I am Scott Shelley, otherwise known as the Cow Guy. Thank you very much for tuning us in. Let's kick off the week right with me. You don't have to adjust your dial. I've been here for a full month, pretty much. All right, let's move on to the markets and see where we closed the overnight sessions, right? There was some more selling. I guess you knew that already. Let's take a look and see what corn has in store for us. But there was a March price below 396, and it was last at 396 and a half. The low is 395 and a quarter. We're down 3 and a quarter in the front March. Moving on to the May, though, we're quoting May more often than anything else right now. 2 3/4 cents lower, down 2 3/4 cents lower to 410 3/4 there, about a penny and a half off the lows. All right, so that's corn overnight. Overnight beans, they're up. Look at that. We got a little green on the screen. March up 2 1/4 cents to 11.35 and a quarter. Then we got let's go out to the July up 2.5 cents to 11.53 3/4. There you go. That's beans. How about wheat? What did that Chicago wheat look like? Not two was again, that was lower again. March down 6.5 cents to 5.67, 5 cents off the lows. But see about what, 11 cents off the highs? So there you go. July wheat, 4 1/4 cents lower there. 5.65 3/4 is last. Moving over to the hard red in Kansas City. 3 cents lower up front March, 5.65 3/4 is last. And July's down 4 1/4 cents to 5.53 3/4. All right, that's the hard red. We're down about 3 to 4 1/4 cents across the board. And any strength in spring wheat up in Minneapolis? Nope. 3 cents lower there in March. 6.38 and a half last. If you go out to say even September's down 4 cents to 6.56 and a half. So there you go. Then finally, let's take a quick peek at cotton. We'll get to our guest analyst. Cotton down 5 points overnight. 94.88 last there. We were up 27 points in the May. We probably should just start quoting that. 26 points higher in the May to 93.75. Let's bring in our next guest analyst, and that's going to be Mr. Brian Hoops. He gets to kick things off, it seems like, every morning. He's with Midwest Market Solutions. He's the president there. I've already done the radio this morning. We had a few guests on that, talked to a few folks. There's not a lot of happy people out there right now, Brian.
Good morning, Scott. Yeah, you're a busy guy. There isn't that much news coming out over the weekend for the grain markets here this morning. It does sound like planting progress for that safrinha corn crop is advancing pretty rapidly. 57% of the crop is now in the ground, and that's 80% of the entire corn crop is what they're planting right now. So yield risks, weather risks become even more heightened than previously. And I think we absolutely have to get past deliveries here this week and get our calendar turned to March. And maybe we can change that narrative from talking about poor demand for corn, weak basis, that sort of thing that keeps driving our prices lower, and change that narrative to talking about spring planting and weather conditions in the U.S., weather conditions in Brazil, because that is what will ultimately put a bottom in this corn market. So we've been talking with clients last night, this morning already, about maybe some call option strategies. If you've made cash sales or if you're making them now, you can look at these options going out into September, pretty much at the money calls, cost you about only 3 cents a month to hold it. That's cheaper than interest, cheaper than storage costs, stops any erosion in prices, limits your risk to the option strategy. So there's some things here I think you producers want to look at, not just get complaints about these prices moving lower. One of the private analysts over the weekend lowered their estimate of Brazil's soybean crop again because of poor yields. So they're down into the 145 to 147 metric ton range. USDA is at about 156. So there's a disparity between what the USDA says and what some of these privates say. And, if these privates end up being right, we're probably undervalued in the soybean market as well.
And just a quick question. I mean, are you seeing any activity in maybe some of these over-the-counter option plays? I mean, I know the volatilities are a little bit depressed, but or how about people buying puts, selling calls to finance them, seeing how that goes? I mean, I guess I only ask that because, I hear the calls too. I didn't do anything. I didn't finish all of last year. I haven't done anything for this year yet. What do I do? And you're kind of stuck, aren't you?
You kind of are. It's a bad time to be marketing. Back in the old days, this used to be called the John Deere low because everybody had payments coming due March 1, rent payments, no payments on operating notes, and so you had to make some sales to generate cash. That's kind of changed over the years, but still, this is generally not one of the times of the year that you want to be doing a lot of either new crop marketing, new crop put option buying, or old crop. You want to be doing something maybe a little more forward thinking. usually the time to buy new crop corn and soybean puts is when you get that planter out of the shed in April and May, and we've put a premium in during the springtime. We've had a rally because of some either too wet conditions or something else. That's when you want to be doing those options. So it's probably a little premature to be doing the new crop stuff, and probably a little bit late to be doing some of the old crop. You're kind of just caught in that middle zone at this time. We've got to get past this week and those deliveries, which could be fairly heavy against corn and wheat.
We call that purgatory where I'm from. All right, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more. Brian Hoops, we'll be right back after this. All right, welcome back. Let's talk about livestock. We had that cattle and feed report on Friday. We'll get to our guest analyst and see what he has to say about it. But why don't we see where we closed on Friday, just so we get a little bit of a bearing about where we might open up here this morning. All right, we've got live cattle. That live cattle board, April was up $1.35 on Friday. 187.90 was the close there. Go all the way out to October. That was up $1.32 to 185.90 there. So 187.90 in April, 185.90 in October. They're both up between $1.32 and $1.35. Not bad for the live cattle. We'll see how we open up here this morning. How about the feeders? Well, we had that March feeder board up pretty good. I mean, $2.52 was the change on the day in March. That was up to $254.57. April, right behind it, was up $3.27 to $259.97. So that was a good board. And we had about $2.50 gains going all the way out almost to September. And then finally, let's take a look at lean hogs. Lean hogs were just a steady a little bit better. April ended up sharply unchanged at 87.20, but we did have gains of between, say, 45 and 70 cents going out the deferred. 70 cents in August was the change on the day to the upside. That price was 99.62. We did have 100. That was the old July. That closed it on 100, spot 20. All right. Let's bring back in Mr. Brian Hoops. Brian, anything in that report jump out at you? What do you think we'll start off this morning at?
Yeah, well, so the report is you look at the numbers, and it's a little bit bearish as far as the placements go. They came in above expectations. Now, that may give us a little bit of negative reaction this morning because we rallied so much into the close on Friday. But if you look at these numbers a little closer, this is still an 8-year low in the placements. It tells us we're probably going to see a little bit more supplies here in the late first quarter, early part of second quarter. Then those numbers should dry up, and by the third, fourth quarter, we should be into really tight supplies again. So about the time we were making a high last year, this year it's going to be about our tightest supplies of the year. So I don't know if this report really changes things, but it could give us some selling pressure on the opening this morning. The cash trade last week, very strong numbers. The slaughter pace wasn't anything great, and now we're well over 200,000 head less killed this year than we did a year ago. And of course, that is always a concern because that's a sign: do we have enough demand to support these price levels? The hog and pig report, the cold storagers did say non-event. It didn't happen on Friday. It was a technical issue. They're delaying it until today, so I don't know. The hogs kind of just traded sideways, waiting until that report was released. Probably see the same thing today now that that report's been kicked back one day until this afternoon.
I want to change gears real quick before we go. Weather, we've spoken to a few guys already earlier this morning about it. Are guys going to be able to get in earlier on there? There have been some unseasonably warm temperatures.
Yeah, it sure has. The grass and here in Missouri, the winter wheat in Oklahoma, Kansas, here in Missouri, greening up considerably very quickly, probably a little bit ahead of schedule. It looks off to a really good start. But yeah, throughout most of the Midwest, it's going to be a warm week, except for middle of the week where it really cools off. It could lead to some pretty active field work preparation and maybe some early seeding across the country.
All right, and lastly, I'll say, there's a lot of talk about this fund short. We had it come out on Friday. Obviously, we all saw it. But I'm not so sure that you want to really bank on your marketing plan being, I'm going to wait for the funds to cover, because I don't know. I think there's too many people kind of on that side of the boat, and I really wouldn't have that be the cornerstone of my marketing plan. What do you think?
Yeah, the question is, where do they cover from? Do they cover from this price level just below $4? Do we drop another 30, 40 cents before they cover? And what if they don't cover these positions for another 3 months? They don't have to. It's going to take either a fundamental spark, a drought, or something like that in Brazil, here in the U.S., to force them out of their shorts, or the technicals have to change where they're have to buy back on buy stops, and neither one is happening today or tomorrow.
Yeah, I agree that they don't have to cover. Number one, you're absolutely true. And number two, there's a long on the other side of that ledger that's longer than they are short. How about that, right? And so you got to keep that in mind too. So those things will kind of get in the way if you're waiting for some sort of holy grail, which is going to be the funds that come cover all at once. And you're right. If they cover from 350 and we rally up to 395, I mean, that's no bueno either, right?
Right. Absolutely, yeah. They're short, but they don't have to cover, and who knows how much they will cover once they start to.
Yeah, I don't want to. I hate talking like that, but that's just the truth. You got to say it. All right, appreciate it. Thank you very much for coming on. Brian hopes he's in Springfield, Missouri. Bring it back here to Nashville. It's getting a little warmer.